Yeah, that's what you have to be doing. When you miss a move, when maybe you are not available, you are not around, and price has moved before you, you just have to go back and find out how you would have taken advantage of the move. So with this move, how I would have taken advantage. Okay, how I would have taken advantage is if you look at the higher time frame, you have to first of all, before you know where price is going to head to, you need to first of all know the direction. You get it at your higher time frame before you move. Everyone, so trading is a subjective game. You get it. But for me, before I will execute a trade, I have to know the direction at the higher time frame, especially on the H4 time frame, before I will move to the lower time frame for anything that I want to do. You get it. So I'm reminding you again to those who want to join the training. You get it. The slots you have, the slots available. You still have slots available. So those who are interested, and I've already told you guys that those who are already in my private group that want to join, maybe you just want to come back again. Just renew your mind. Okay, maybe get one or two things. When during the last boot camp that you joined, there are certain things that you didn't get it. You want to join again, you can DM me. There was a discounted price for you. You get it at a discounted price. You get it. So if you want to join, you can DM me and you talk about the discounted price too as well. Yeah, so those who have not joined before, try and join, because when it comes to market structure, when it comes to how to read prices in the candle structure and those stuffs, I mostly don't talk about it when you are doing this analysis like this. We mostly look for the entries. Okay, we don't look for how to identify market structure, and market structure is the most important thing. Okay, the reason I'm saying I would have taken this trade is because price is already in an uptrend. Okay, the things that I consider, things that I pay attention to, everything points price is moving up. You get it. So for you to be able to take a buy or sell, you need to make sure you understand this thing. It's very, very important. Okay, it is very, very important. You get the direction right, you get it wrong. It's all going to base on what your understanding on market structure. So if you want to join, okay, it's not compulsory. Okay, but if you want to just understand and join, do be an independent trader, then you need to get yourself educated. Because for me, it has taken me a long time for me to figure out, and I'm giving it to you. So if you learn from me, it's going to shorten your journey. That's what you need to understand. Yeah, so price currently trend is what? An uptrend. Okay, there was this gap over here. This gap over here. When is it going to fill? That's the problem now. When is this gap going to fill? Because logically, or from past experience, mostly when price opens, when price leave a gap, okay, gap is simply an error in information of price. You get it. I've taught you guys. Those who have joined the training before, I've taught you guys, or those who have gone through my course, I've taught you guys. When you talk about gap, mostly when price is forming, this is how it's supposed to form. If it's a bullish move, if it's a bullish trend, this is how it's supposed to form. This is how price is supposed to form. Okay, so this is a bullish candle. A moment. Good morning. Sorry, please. Yeah. So I was explaining this thing. I was explaining about gap, right? Yeah. So this is a bullish candle. You get this a bullish candle. This is the opening. This is the close. So for the next candle to keep on moving up, okay, we're expecting it's supposed to start from where it's closed. So this is where it's supposed to start. Okay. So this is where it's supposed to go. So the next candle, if it wants to move up, it's supposed to start at where it's closed. But at this point, the moment price will maybe open, this is the close. It's a bullish. The moment is to start from here. One thing you need to understand is what there was a gap. Okay. There was a gap over here because it was supposed to start over here. So there was an error, okay, in formation of the candles. There was an error in the formation of candles. So that's what you need to understand about gaps. So gaps mostly happens because of what? Because of these factors. Maybe when there was volatility, as in a lot of people buying and selling this asset. You get it? A lot of people buying and selling these assets when those news events, okay, high impact news events, all these things. And when markets close to and open, when there was, especially mostly we see gaps during the weekends, okay, when there was some economic events, there was some news event during the weekend. So the moment the market opens, all these news events are going to be factored in price movement. You get it? All this formation is going to be factored in price movement. So it mostly comes with a lot of speed. You get the price mostly comes with a lot of speed. The formation comes with a lot of speed. So that's why you mostly. But this one happens at was it Sunday? This one happens on Monday also. I don't think it was. Yeah, it was Monday. It wasn't when markets open. Yeah, so let's check out gold. It's currently what I was expecting it to do. I didn't see it moving. So we are currently in all-time high. Who is having physical gold? Who is having physical gold? We are currently in all-time. Everyone knows gold is definitely going to move up. If not today, it's going to move maybe in the next month or two. But can you buy and hold? What is preventing you from buying gold and holding it? There are a lot of factors. Spread, if you keep, especially with these retail brokers, when you hold trades overnight, the spread alone, the commission, the swap fees, okay, it's mostly going to even chop all your profits. It's going to chop, and you have to make sure you have, like, you have an equity. You get it? You have to make sure you have an equity because sometimes it comes with ups and downs. So if you have like $1,000 account, you can open 0.01. You buy and hold. You just forget about no stop loss, no take profit. Unless you take profits only when you are satisfied. Because gold is going to move out. You see, it keeps on creating all-time high. From last year, it kept on creating all-time highs. It kept on creating all. But you see, even though we have it in mind that it's going to keep on moving up, okay, because of the nature of how gold is. You get it? Because of how gold, people, mostly investors, trust in gold as compared to the fiat currencies. Investors mostly, they see gold to be money. It is backed by something. Okay, it has value. But currencies, one world leader can just go be in his room, command people, and they will start printing it. So fiat currencies are not having value. What I'm trying to mean is what? It easily loses its value. If you hold fiat currencies, the chances that it's going to lose its value is what? It's very high. If you're having $1 today, $1 is not going to worth $1 tomorrow. You get it? The value is going to decline. The value is going to go down. You get it? But gold, it keeps on what? Appreciating in value. Keeps on appreciating in value. So more investors love gold as compared to what? As compared to fiat currencies. You get it? So that's why it keeps on moving up. And the reason why it keeps on moving up is what? More people are demanding it. So in the basic law of demand and supply, the higher the demand of something, okay, if people are demanding something, if there was this product that a lot of people are demanding, what is going to happen? Prices are going to increase. You get it? Prices are going to increase to meet the demand. So it's the same thing. A lot of people, most people demand gold. So that's why the price keeps on moving. So currently 1 ounce, gold is measured in ounce. 1 ounce of gold, you need to get $4,715. Okay, 0.002. Be able to get 1 ounce of gold. Who has seen gold before? And how is the size? How does the 1 ounce of gold looks like? So it keeps on moving. So if you have money, you just buy and hold. It will keep on. So currently it has created all-time high. It hasn't gotten to this price level before. It hasn't gotten to this price level before. So it will keep on making time highs. Because if you look at the monthly currently, we don't have, price hasn't gotten to this level before. So let's watch the chart. This is where it got listed. 1833. And currently, so history has been made. Thank God you are present and you are seeing history being made today. So today, gold has gotten to a level where gold hasn't been bought. 1 ounce of gold hasn't been bought at this price before. So you need to count yourself as a blessing, because you are seeing history happening before you. You are seeing it live. So you see, so imagine you bought it 2005, you bought gold and it kept on holding. Those times, 1 ounce of gold, wow, 120. 2005, 1 ounce of gold was $28. Currently, it's $4,000. How many years different? So 2005 to now is how many years now? Close to 20 years or so. How many years now? 2005. And you are in 2026. 21 years now. Yeah, so that's it. History has been made. So yeah, so if you look at the weekly, technically, so we don't know when is this gap going to close. If you look at the weekly time frame, if you watch the candle, see the candle open with no wick. So the chances that it can come down, the week is still young, Tuesday. So maybe we can get some downpour on gold, okay, to be able to just normalize price action over here. For it to normalize price action over here, we don't know. So let's move to the daily. Let's focus on sectional time frames. Okay, the weekly and those lives are just for, if it happens in a section, we are just following price. You get it? So we are not trying to predict, because technically we know that when candle opens with no wick, or when maybe charts create gaps, it mostly fills. So we are just going to predict ahead, or we are just going to take action ahead as the thing has not happened, there's no confirmation. You are just going to take action. It doesn't happen that way. If you do that, unless maybe you are just a position trader, you hold trades long, you hold trades overnight, like you hold trade for a very long time. But since we are sectional traders, we are just day traders, we are just scalping for just a moment. This price action on the weekly time frame is not much our concern. You get it? So let's move to the daily time frame and see what's happening. At the daily time frame, this is currently what is happening. Weekly time frame, this is what's currently happening. So let's focus on what's happening. So this point, when you come to the charts and you see something like this, you need to be very, very careful when you are taking trades, because you don't have anything to gauge where price is going to get to. You see, we use support and resistances to gauge where price is going to get to. But at this point, there's nothing to be used to gauge. When price was here, we were using our left. If you look at your left, what is happening at your left, we use it to gauge. But currently, if you look at your left, there's nothing to be used to gauge where price can react to, because mostly price reacts on historic price data. Okay, historic data. That's what mostly happens. But at this point, there was nothing to be used You get it? So it becomes very, very like dicey. It becomes very tricky when you are in a trade. You get it? You don't hold it for long because you don't know when price is going to retrace. You get it? You don't know when price is going to retrace. So the reason why you will be buying, if in case there's an opportunity, you'll be buying, is because of the section you are in. Okay, but when price is in an all-time high and you are trading during, or you are trading at a point or a moment where there's no volume, you get it, there's no volume, that is when price starts hitting your stop loss, and you wonder why price has hit my stop loss. You get it, you wonder. You see, price has moved a lot. Price has moved a lot. Price has moved a lot. So at this point, you will be taking a buy, but not now. Let's wait. You have 7 minutes. Let's wait for this candle to close. You get it? When it's closed, it's very simple. You just follow. So when price close with the time of the day, volume hitting the market, when you see certain confirmations, we can be taking a buy. Okay, let's wait for the 30-minute candle to close. If you see a reasonable price action, you will take a buy. So we have like 7 minutes. Okay, so it's going to align with the odds, the time of the day, the volume time when sections open. You get it? When sections open. So it's very simple. You just follow the trend. Okay, if you look at the H4 time frame, even if you look at the daily time frame, the daily time frame is an uptrend. If you look at the H4 time frame, price is an uptrend. Okay, so if you are here and you don't understand how to read the market, you get it? If you don't understand how to read the market, you need to join the training, the upcoming training. So price is currently an uptrend. So if you look at the H1 time frame, H1 time frame too is an uptrend. I should have. So let's wait. Let's wait for the closure. We have like 6 minutes. Let's check the fundamentals before. So today is Tuesday. At 7 p.m. we have claimant count change. So it has already happened. It has already happened. So apart from that, you don't have any high impact news. So you are good to go. So let's wait for the closure. Price is so at this point, as I'm saying, it becomes very tricky. Okay, I was expecting this candle to close bullish. That's when you would have taken a buy. That was what I was expecting. So price, I think it's not giving a chance. It's not giving a chance. So when it happens like that, so this small move is like close to 50 pips. So I was expecting this candle. I was thinking this candle is going to close bullish. Then I would take advantage. When it's in all-time high like this, it becomes very tricky. So let's see. You have like 4 minutes. Let's see how this candle is closing. But if it moves like too high, if it moves too high, the stop loss is going to be like 100 pips. Stop loss is going to be like 100 pips. I don't like to see gold moving all-time high. It becomes very tricky to trade. it become very tricky. Yeah. So as I was saying, before the candle close, this is what I was saying. So the one entry would have been here. You get it. One entry would have been here. One entry would have been here where it was even close to. Yeah, so it's pulling back. So I think I need to start implementing this. I need to, anytime there was a bank holiday, I need to try and maybe sleep early and trade there. Because that's what I've noticed. Anytime there was a bank holiday, a day after the bank holiday, the markets move massively during the Asian session. That's what I've noticed about price movements. So you have like 2 minutes for the 30-minute candle to close. So when it closes, we need to be super careful with our executions because price has gotten to the peak. You get it? Price has gotten to the peak. So at this point, the stop loss too is going to be very wide. 120 pips. Crazy. So before you enter, so at this point, the only way is to maybe use the previous candle lows. Is to use the previous candle lows. So we have like 47 seconds. So let's see how the 15-minute candle is behaving. So the wick is too high. You get it? So this at this point you'll be patient small. It has left a long wick. You get it? We need to wait for better. Maybe we need to wait for lending open. You get it? Because price has moved a lot. So the 30-minute candle has closed. So you need to see price pulling back. Okay. So when you are executing a trade, this is how price moves. It will mostly trick you. When it starts opening and you enter, you mostly get fake out. Wait for price, wait for it to grab liquidity. Okay, like what? Yeah. So you see, it's grabbing liquidity. Wait for it to grab liquidity. When it start turning, okay, before you execute, that's what you need to be doing. When price, maybe if you have anticipated, when price breaks the high of this one, you are going to execute. You don't have to do that. What you have to do is to wait for a liquidity price to maybe come down, take those who are willing to sell, those who want to sell, wait for them to keep on selling. Okay. When the buyers take over, then you execute. You get it? Even this one, the top wick is not that healthy. But I would not love to buy at the high over here. Price is too high. The stop loss is going to be something else. I'm not comfortable doing that. If price breaks the high, okay, I'm not comfortable executing. I want to patiently wait I would love to execute during lending open. So we have like 30 minutes for lending open. I want to see how lending open is going to be, because I need to be very careful. Price has gotten to the peak. There was nothing to gauge. So if I want to execute, maybe if price is currently here and I want to take a buy, I know that this point is going to be my gauge. Okay. Point is going to be my target. This point is going to be something I'm going to use it to gauge. But here, there was nothing to be used. Even at the lowest of the lowest time frame, there was nothing to use. Okay. Unless maybe if you use those concepts as in the psychological level, price is breaking. I'm not comfortable. The stop loss is going to be very high. You need to check your risks. Okay. So even if it takes the high, I'm not going to execute, because the stop loss is going to be very wide. See, 100 and something pips. So if you are using the previous candle low, this wick is not something, I think it's not healthy wick. Let's say maybe if it's wicked down to this point, if you saw something like this, so a lot of people don't check their risks. That's why they keep on saying, I've blown my account. Blowing an account is an optional. It is a preference. If you desire to blow your account, that's when you blow. If you desire to, I'm not saying even if you manage your risks, you are not going to blow it. You blow it, but it will take time. So this is where I would have executed. Maybe you can use this one as your stop. Okay, the previous candle. But see how this previous wick can't be used as stop, because there's no support or resistance. With this one, if I execute, I'm going to hide over here. Okay, there's this zone over here. I'm going to hide. But this one, if you execute, where to place your stop loss is going to be here. It's going to be here. And here, there's nothing to maybe protect you. It's not a safer distance. Okay, so let's wait to see how lending open. Maybe lending open will give an opportunity. 25 minutes more. Let's see how lending open is going to be. That one will be more safer than this one. What is happening over here? What is currently happening? What do you guys think? Let me allow you people to speak. So if you want to talk, you can come out. So lending open will be far better, because where price has gotten to, it's kind of very, very dicey. The chances that it can pull back is very high, because you have a lot of factors that is pointing price can point down. Price can head down. You have a lot of factors. If you come to the weekly time frame, there was a gap over here. You get it? There was a gap. So a lot of things pointing that price can keep on moving. So there was another gap over here. So this was market open. So I'm not going to buy. Because stop loss is very wide. Stop is very wide. This is the logical stop. 100 and something pips. I'm not going to buy. So you see, it's all about discipline. It's all about knowing what you are doing and sticking with your plan. That's what separates those who are winning in trading and those who are not winning. Those who are not winning in trading, one, they don't know what they are doing. Two, they are not disciplined. they feel like they have to be rich quick. They have to be rich quick. But the game is a steady game. You see how mostly when a cat is watching something, you see how it watches steadily. It's the same thing in trading. You need to be very attentive. You need to stay alert. You need to watch, like how cats mostly when it wants to grab something, or maybe lion or those wild animals. If they want to catch something, they will, if you like, watch the wildlife movies, you will see it and implement it in your trading. You don't have to enter every move. You don't have to enter every move. Come to the market at the right time. So the right time is the timing. You get it? Come to the market at the right time. If you start implementing these things, as in coming to the market at a time that is appropriate, the time that most there was volume in the market, okay? There was volume in the market. A lot of institutions are participating in the market during that time. That is the most profitable times. So understand that, and you what, implement that. Can you people hear me? Can you people hear me? Elom, you raise up your hand. Yeah, so you are waiting for lending open. So let me see what happened for the gap. Let's check out news. Don't think European Union will push back too much on Greenland. What caused that? From don't think European will push back on Greenland. We have to have Greenland. Mhm. Yeah, so let's wait for lending open. So you have like 90 minutes. Let's see what's going to happen. But at this point, price has moved a lot. Price has moved a lot. So lending open will determine if it's going to move further. It's going to determine if price is going to move further to keep on creating the all-time high. But the chances that you can see a pullback is very, very high. That's what I'm anticipating. The chances that you can see a pullback, okay? And if you look at the H4 time frame too, the previous H4 has been taken. The previous H4 high has been taken. and each one too has created this market structure over here. So at this point, I don't love things like this. So there was an entry to over here, but the timing was very bad. There was one entry to over here. There was one entry to over here at 4 a.m. There was one entry over here. Because if you look at your left, so maybe this point, the wicks are going to be your gauge of 86 pips. My price kept on moving high. That was 4 a.m. I was asleep then. So you need to be very systematic. Okay, you don't have to just be, for you to get a correct data that you can back on, you need to make sure you are having a system. Okay, this is the right time, this is the time you need to trade, this is the time you don't have to trade. But if you just wake up any random time and start executing, it's going to be very hard for you to track your performance. It's going to be very hard for you to know what is working and what is not working. So especially to those who don't know what they are doing and you are actively trading, please, it's very important you have a journal. You get it? You need to document your journal. You need to document your trades for you to know which one is working, which ones are not working. You need to document your trades. Okay. So if you document your trades for maybe a month, if you document your trades, if you have like maybe 50 trades that you've taken, you will get to understand that, oh, these are the times that I'm losing most. These are the times that, these are the instrument that is giving me more wins. These are the instrument that I'm having more success on. You get it? Then you start taking away the ones that are not giving you success, and you start implementing the ones that you are getting more wins. That's all about trading. That's how we come about with strategy. You get it? But if you don't have any data, it becomes very difficult. It becomes very, keep on, because data is what's going to help you to know what you are doing right and what you are doing wrong. If you don't have data, you blindly trading. Your mindset, trading is not going anywhere. Forex is not going anywhere. So your mindset should be long term. You get it? Building, as in being professional, knowing what you are doing, being able to explain it to someone, being able to explain it to your younger sibling. That's what you need to aim for. Not like, oh, I just want to make a quick box and I'm just out of the market. Nah, you need to take it as a profession. Oh, I'm building a skill. I'm building this skill. So when you explain it to someone, it will make sense to the person. If you explain your thought process on how you take a trade, it will make sense, okay, to the person you are explaining it to. But if you just, because you are copying, some people copy it from school time. So in real life too, if they don't copy, they don't they've copied real life too, they want to copy success. Even though success you need to copy, but try to do it yourself. Try to do it yourself. They want to copy everything. They want to copy everything. Yeah, so what's happening? What's happening on gold? As I said, at this point, it's very risky. If I take a buy over here, my stop loss is going to be way bigger. And I don't know my target. I don't know my target. I don't know my target. So it's moving up. My stop is going to be wide. If you use this one, it doesn't make sense. If I use this one, it doesn't make sense. So the high has been taken. You get it? The high has been taken. But I'm not going to execute because I don't have a proper stop. Price has moved a lot. Okay, and the wick 2 is not healthy. So I'm not going to execute. If we had a long wick over here, okay, if the wick came to this level, I would have used that one and use that one as a stop. But at this point, price has moved in now a lot. When price is in all-time high, it becomes very tricky. Maybe you can get a pullback like this. If you get a pullback like this, then I will execute. I need to execute what makes sense. So which you don't know the stop loss. We don't know the stop loss. $115 pips. That's big. I want to see a pullback. I want to see a pullback like this. Then I'll ride it up. Price is too high. So when it comes to my execution, I'm very calculative. Let me check Forex. Same thing. So it's the same thing too. Same charts. So let's wait and see landing open. How landing open is going to be. Price has moved a lot, so not moved a lot. Landing open will bring in some volume. You see, anytime you are executing a trade, make sure you are calculating your risks. Risk calculation is very important. Don't just blindly execute the trade because it makes sense, because the trade is looking good. So you just blindly execute a buy, you just blindly execute a sell without checking your stop. You get it? Check your stop loss. Is it wide? Comparing it to your target, is it wide? So the reason why I'm saying this one is wide is because I don't have any target. I don't have anything that is going to be my gauge. You get it? So if I take 100 and something pips stop, where is it going to? Where will my target be? I don't even have a target because I don't know if price is going to keep on moving high. You get it? If price is going to keep on moving high, I don't have any target. You get it? I don't have any target. So it becomes like, let's say maybe if price moved like this, created this support over here, with that one, you would have executed a buy, making this one as our target, taking this one as our target. But how price has moved, no target. Executing a buy is at your own risk. You get it? Executing a buy is at your own risk because you don't know if price is just making some fake out and it will retrace. If we executed over here, we clearly see we can clearly see that what? We can clearly see that this is the target. Okay, so we can patiently execute a buy over here, place our stop loss over here, and this point is going to be our target. So let's say maybe if it's something, what the price action happening over here, if it is the same thing happening over here, we can patiently wait. We can patiently wait and what? We can patiently wait and wait for anything that is going to happen, because we understand that this is the target. But if you enter a trade over here and price is behaving like this, you are going to panic because you don't have any target. Okay, you don't have any target and you don't know if price is going to come down, price is going to keep on moving. You are just going to be asking, you are not going to be confident in the trade you've executed. But this one, there was a target over here, so you can use this one as a gauge for price to get to this point. But this one, this trade, this buy is very risky, even though everything points out that price can keep on moving, but it's still very risky. You get it? I'm just patiently waiting to see how lending open is going to be. You get it? I'm patiently waiting to see how lending open is going to be. So trading mostly comes with a lot of experience. If you have experience, you are going to understand certain things. So it's not about just pressing buy and sell because you want to be this person the following day. Nah. It's about doing the right things. Okay? Doing the right thing at the right time. That's the most important thing. So we are waiting for lending open. If lending opens, then you will know what to do. If lending opens, then because looking at my left, there was no data. There's no data to my left. So you see, from the whole of yesterday, was it the whole of last week? Gold has been consolidating. It started from last week, Monday. During the New York session, Monday, gold consolidated. You see, it's making equal highs. It's making equal highs, equal lows, equal highs, equal lows. And when you broke out, what are you expecting? This is what people call a chart pattern. When price broke out, what are you expecting? You're expecting price to keep on moving up. So this was a massive breakout. So you see the consolidation. Price consolidated, and we had a breakout. See how long it's consolidated. Then we had a breakout. So you see how experience has helped us today of not executing that buy. It's all experience. You get it? It's all experience, because you come here to learn. Okay, so you have to also start implementing it. When price has gotten to a level where you don't have, even if you move from the higher time frame to the lower time frame, you don't see anything as your target. You need to be very careful with its execution. Okay, it's not about it's not about asking the monthly time frame doing this, the weekly time frame, everything pointing up, so you are going to execute. Those times I would have executed a sell. I would have been in rush to execute a sell. You get it? I would have been in rush. But if you check your risks, comparing it to your target, you don't have any target. So it's very important. So you see, last time when we executed a trade, everything makes sense. I said you are executing, and you went ahead and execute. We executed a buy, and price played out well, but just that we couldn't manage our emotions on certain things. So we lost at our side, but the analysis went in our favor. Where was the trade itself? Yeah, I think here was it. Yeah, this trade. This was the trade. So I came to the chart and executed a buy price. We placed our stop loss over here, but later I moved the stop loss up to minimize the risks. And price moved. Okay, price moved. Analysis was right, but you couldn't manage the trade well. You couldn't manage the trade well. Yeah, so let's see. You have like 3 minutes for lending open. So the H1 is going to close. The M30 is going to close. So if the trade makes sense, I'll just execute. If it doesn't make sense, I won't. You get it? Because the more you become indisciplined, the more you are delaying your success. That's what you need to understand. So if you are someone who wastes time, if you are wasting your time, if you are indisciplined, if you are doing things that is not bringing any growth or bringing any progress, one thing you need to understand is what you are just delaying your success. And man is being measured by age. You get it? Man is being measured by age. So if you wake up early morning, you need to ask yourself, as in the day has gone by, in the evening, reassess yourself, ask yourself, did you do anything that is going to bring growth in the next 5 years? Because don't expect, especially to those who are religious, those who are church goers, they think like prayers and those things are going to save them. It's the minor things you are doing now that is what is going to accumulate, okay, in the next 5 years, in the next 10 years. It is not the prayers you are praying. You get it? God does not reward those who have not worked. If you have not worked, what fruit are you going to bear? Even the Bible says, what fruit are you going to bear? You get it? The seed you are going to sow is what is going to bear that fruit. So if you are here, I'm trying to bring it into trading. If you are here and you are indisciplined, in the next 10 years, in the next 5 years, don't expect to be a profitable trader, because you didn't stick to one thing. You were jumping from one strategy to another strategy. All these things are going to accumulate. Okay, that is the results you are going to get in the next 5 years. In the next 10 years, that's the results you are going to get. So you need to take note of this. It is no one is going to make you successful. No one is going to make you rich. You are going to make yourself. So the little things you are doing today is what is going to be accumulated. Okay, so let me tell you this thing. So when I was in my 20s, I was very obsessed about poverty. I was I was working. I always say, for now I'm very lazy. Now I'm very lazy. Those times I work. I don't have friends. I don't have friends. I don't like taking friends, because you are going to a friend is just going to distract me. Both male and females, they are going to distract me, because I'm always inside. I'm either reading, I'm either listening, I'm either like doing something substantial. You get it? And now all those little things that I did those times is what has accumulated now. You get it? It's what has accumulated. I'm not saying like I've gotten there, but at least I've gotten freedom now. Okay, that's another stage in life. Okay, before maybe being super rich, right? Driving these supercars and those stuff. That will come. I know it will come, since I'm still working. But the first stage is what? To escape the metrics. Waking up early morning, chasing, if you go to the roadside, if you are in Accra by this time, if you go to the roadside, you see the number of people at the roadside. I've escaped that thing. You get it? I've escaped that thing. It's a stage. All because of the little things I did, I made up my mind to be doing. Okay, so don't expect any miracle whilst you have not worked. Don't expect anything to happen. It's the little things you do that is what is going to accumulate. Okay, that's what is going to accumulate. So you need to understand. So in trading too, the moment you start, you keep on breaking your rules. You keep on breaking your rules. You are not supposed to trade at this time, and you trade. You need to understand you are just delaying your success in trading. You are just delaying your success in trading. That's what you need to understand. You get it? The little things that you do is what is going to accumulate. So today's live stream, one thing I want you to take note from this live stream is what? No one is going to save you, and no miracle is going to happen to you if you have not worked in the past. Okay, so let's say maybe God has blessed you, giving you a platform. Oh, go and talk to these people. There was a big stage, they've called you. Go and talk to these people. It's an opportunity. You get it? It's an exposure. But ask yourself, what are you going to say to these people? What are you going to tell these people? You need to ask yourself this question. What are you going to tell these people? You have nothing. You get it? So that's what I'm saying. It's about the knowledge you have. That is what is going to bear the fruit. That is the knowledge you have is a seed. You get it? So keep on working. Okay, give yourself time. Take one skill, master the skill. You see how I'm explaining trading to you? Because my whole time that I was supposed to maybe watch football, be with friends, playing games, I sacrificed that moment to learn this thing. This is what I mastered. You get it? This is what I mastered. Whilst people were playing football, playing FIFA game, doing all other things, all like stuffs with that is going to make them giving them instant happiness, instant excitement. I sacrificed that moment to be locked myself in a room to study. You get it? So take note of that. So if you keep on breaking your rules, you are delaying your success in trading. You get it? You are delaying your success in trading. So at this point, lending has opened. You get it? Lending has opened, and price action, there's nothing good about this market. Okay, there's nothing good about this price action. There's nothing good. So this point is going to be the gauge. You need to be very cautious about when price is in all-time high. So I'm not going to execute a buy at this point because price doesn't look good. If this candle broke above this one, I would have executed a buy using the previous candle low. Executed a buy over here. Would have gotten like 60 something pips. But at this point, it become very tricky. I'm not interested in the buy. I'm not interested in the buy. It doesn't look good. Lending has opened. Okay. Is anyone having a question? Is anyone having a question? I mostly capitalize on the time of the day, the volume time. That's what I mostly do. So maybe if you can get a nice maybe price close around this level, taking a buy would be good because price is close to your reactional level, your observation level. But if price keeps close around this side, it becomes very tricky because if you are going to be in drawdown, see how this one came down. See the drawdown. You don't want to be in deep drawdown where it's going to be like, see the drawdown. It's like 80 pips. You get it? It's like 80 pips. So you need to be very careful. You don't want to be in drawdown of 80 pips. Even 0.01 is going to be like $8. You don't want to be in such position. So at least it should be close to the reactional level. Okay. It should be close to the reactional level. So I'm not getting any trade over here. So when it's in all-time high, it's best when you trade with volume time. Because at this point, I'm not going to say I'm scared, but I'm very careful with the execution because price has moved a lot. Price has moved a lot. So the chances that you can get some pullback before price will keep on moving again is very high. All these pullbacks are not significant. Like they are not significant to me. We need to, at least you need to see a deep pullback. Okay, if you get a deep pullback, that one will be fine. Then we execute. Then we execute a buy. I'm very careful with the execution. Okay, so let me give you the scenario. If in case you see how price is closing, if in case maybe price close to this level, okay, if price close to this level, buy can make sense. It makes sense, but you don't have to be in a trade for long. You don't have to be in a trade for long. So at this point, for me, I'll wait for this candle to close before I will execute. Before I will execute. It's still making highs. Okay, guys, is anyone having a question? They didn't get any trade. See, we talked about the buy. See, we have analysis and confirmations. You get it? You have analysis and confirmation. So sometimes you can know the direction. You see, when I came, I didn't say we are going to be looking for a sell. I said we are going to be looking for a buy. That is one part. The other part is what? Your entries, your confirmations. That's where you have to be very careful. So how did I know that price is going to move? Price is going to keep on moving up because of what the higher time frame is saying. You get, so I don't have to disobey the higher time frame. But when it comes to the entries, that is where you have to be very calculative. You need to order your steps very, very well. You get it? You don't have to just jump in. So lending open is making action. This lending open, but there was no entry for me, so there was no point for me to execute any buy. I don't care if it moves 1,000 pips now. I don't care because there was no confirmation for me. You get it? There was no confirmation for me. If you execute over here, what's the stop loss? 96 pips. Its price is way high. At least it should be close to this point. Okay, if price is close around this point, if price is close around this point, executing a buy makes sense. But see where price is. Price has moved a lot. Price has moved a lot. So I should let it go. So this is just a break. Price has broken, retested, trend continuation. Okay. Price has broken and retested. Break, retest, continuation. But we have a lot of wicks over there. A lot of wicks. This trade makes sense, but it's way higher. You get it? It's way higher. Price is way higher. And there was no target too. Yeah. So there's no target. There's no target to be used. So I'll wait for a better pullback. Maybe during the New York session, you will see a better pullback. So I don't know how far this one will move, but I want to see a significant pullback. Then I will execute a buy. That's what I would do. Because at this point, executing a buy over here, close to 100 pip stop. The stop is wide. The stop is wide. So I will wait for a better pullback during the New York session. Let's see if you can get a better pullback during the New York session. So is anyone having a question? Is anyone having a question? I want to wrap up. So this is what I'm talking about. Let's wait for a significant pullback. Okay, the way price has pulled back, it becomes very tricky. When it makes a significant pullback, we can get something that can be used as a target. You get it? Can get something that can be used as a target. But at this point, if you execute a buy over here, where is it going to be? Which level are you going to use it for your target? That's the difficult thing now. The level to be used as your target is going to be very difficult now. So let's patiently wait. Okay, guys. If there was no question, see you again. Is anyone having a question? Or is anyone having an idea about the trade? What's happening? Is anyone having an idea about what's happening? Imagine buying over here. It's too wide. Imagine buying over here. Your stop is going to be very wide. Any question? So the opportunities are going to come every day. You just have to position yourself. Just have the skill. The market is moving every day. This thing has happened before. Gold has created once some time ago, created all-time high, and it has created all-time again. So movement is going to happen. Just understand how price move. That's the most important thing. You get it. Just understand how price move, then you follow suit. I know someone is going to buy, someone is selling. Okay, I know someone is selling. I believe someone is selling. So if you understand price action, you are not going to be against what the main players are doing. You are just going to follow. If you know the direction, know where you are going to buy, where you are going to place your stop, you are there to go. You get it. You are there to go. Any question? Any question? If there's no question, I'm going to call it a day. I'm going to call it a session. Okay, guys. So if you're in my private group, I'm going to communicate with you guys about maybe what I'm thinking about the trade again. So thank you all for showing up today. Or is anyone having a question? Okay, I've seen someone raising up. Elias, you've raised up your hand. Do you have any question? Elias, do you have any question? So you see the reason why I was saying it's too high. You don't want to enter a trade where you don't want to be in a situation where you'll be in deep drawdown. Okay. So thank you all for joining today's stream. Hey Brainy Alpha. Can you hear me? Brainy, are you there? Alpha.
Okay. I've done it now. What I'm doing for yourself?
And why you just woke up?
I swear. I didn't sleep early yesterday.
Why you
It's
took the
noisy.
buy? You traded during the Asian session.
No, I wanted to because I know definitely the good is going to buy. But telling me
Yeah,
that will
when there was that's what I've also noticed. When there was bank holiday, day after the bank holiday, gold moves massively.
Charlie, the move is always massive. The move is so. I was like, then my main aim was to trade it, but I slept. I slept on the way.
I just woke up to see it.
Charlie,
I just woke up to see it.
move
So
was
maybe
massive.
next time, bank holidays will be happening. So at this point, it's very tricky. If you take a buy, if you are not careful, price will trade because all the
Crazy,
move has happened, and
yeah,
there's no anything to use it as a gauge. So that's
yeah.
why I'm very careful. I'm being calculative with the buys over here. I'm very careful because if you're not careful, price will retrace.
But let me see too, because all the move happened during the London, the Asian session.
Yeah. So you just have to be very, very careful. Very careful.
It really paid me, pa.
Oh, it will happen again.
I was awake to
So,
2 o'clock. To make sure
so
then that
around
far.
three, around three now, boom. Started from three. Oh.
Charlie, it's not easy.
Maybe this point around four. This is where the entry would have been there.
Yeah, yeah.
Breakouts. Please just stop
But,
loss.
but yesterday I've gotten them during the NYC session.
You took that
That's
by.
buy. That buy. It was looking very clean.
Forex.com. Eh?
Yeah, Forex.com.
This way. So you see, this one too was the same thing that happened at that time on my live stream. This was the same trade. So the reason I always say the patterns repeat, it keeps on repeating. So it was the same thing that happened over here.
Yeah.
The buy we took the other time. If you guys remember on the stream, you took a buy over. Yeah, this one. Was it this one? You took some buy. Okay. I think.
It's not easy. But good be serious, pair. I really love it too much. Oh, it's serious, oh, good man, yeah.
So you don't check currencies anymore.
No. I stopped checking currencies.
Yeah. So.
I don't even analyze them again. Like,
Hey, last time I saw some massive move on GBP USD. Yeah, it was clean, but like I saw it after it happened. I don't know what even dragged me to even watch currencies.
Currency. I mean, yeah, I was like, that spirit span, we could drag me currency again. Yeah, no.
Last year I showed you Shaggy. You enter by then I think this.
You say, oh, Charlie.
Yeah,
Oh.
so this is the move you took the other time on lending session. It's the same thing that happened yesterday. Last time during the lending session.
Okay.
Yeah, it was the same thing that happened. So this is where the entry was taken.
It's pulled back to the zone. Nice
Yeah.
one. Yeah. I remembered it, but I didn't.
But that day, I didn't manage the trade well.
Oh,
I pushed my stop. Price started pulling back. So when I watch the 30 minutes, you see the 30 minutes created the support over here. So I moved my stop to this point. Price came, yeah. But it even gave another opportunity. And price started moving. It was the same thing that happened yesterday. But yesterday, I've noticed that mostly it becomes very tricky during bank holidays with gold. Yeah. Like price doesn't move as you used to see. It moves back and forth back. So it can stop you. So I didn't want to trade yesterday. But I was watching the chart, but I didn't want to execute. Sometimes you need to discipline yourself.
You said I was lucky, like it's just pull back and give a good entry on the M5 and straight to TP. So it was like it's moving my favor yesterday, but it's moved very well.
So at this point on gold, I just want to see, because now I'm very careful. I don't know whether it's going to keep on moving up.
But like when it break that zone, can you counter it for yourself? Because there was a clean zone, and the moves to have happened during the NYC.
So at this point, you don't know when it comes to counter trend. This is how you can take counter trend. Maybe if price has got into the peak like this, you can say, oh, maybe price has got into the target. So the chances that it can move high, move low is very high. But at this point, what shows price has got into the peak?
Okay.
That's where the counter trend becomes very tricky. What shows price has got into the peak? It can happen because everything is pointing up. So taking sell is at your own risk. That's how I see it. Taking sell is at your own risk. Or maybe unless you wait for something like this, price break, pull back, okay, give you a scenario like this. That one, all confirmation, everything is pointing that maybe this one, something like this. With that one, you can go in for a counter trend. You get it. But what is happening over here? There was nothing shows. You get the price has broken the zone, pulled back. Then you can say price can keep on moving up, down.
Yeah.
So that's what, if you want to take a counter trade, you need to wait. If it breaks up, wait for a pullback, a support, then you can say you can go in for a sell.
Okay.
At
Okay.
volume time,
Yeah.
after 9 to 10, price, there was no
Consolidate.
certainties in price
Mm.
movement. That's why sometimes after 9, after 10, you can get a good setup, but sometimes it fails, sometimes it's going in your
Yeah.
favor. But
Good
if you
favor.
want
Yeah.
a certain price, certain direction, or maybe a certain price move, it's better you wait for the timing. You watch the time. So
Okay.
at this point, if you are executing, you know you are in volume time. Lending just open 27 minutes after lending open. So we
Landing
still
open.
have some volume, maybe 9. But after 10
Yeah.
going, I don't trust the volume during that time. So maybe
During
I'll
that
come
time.
back around 12:1.
Oh, okay.
Yeah, to come for the New York session. When you do that, it reduces your your risks and your
Yeah.
losses too
Seriously.
as well.
Mm.
So let's see if today good can give opportunity. Because lending, nothing is going on. Maybe
Yeah.
one surprise thing is that if you leave, then it will start moving.
It's not easy.
Yeah, one thing I've seen about the game is it's all patience game. You need to be very
Yeah.
patient.
Very patient. It's serious.
Yeah, that's what I've known. If you rush, the moment if you start rushing, you start losing more. But if you are very calm, you just tell yourself, unless I see perfect thing before I will execute. With that one, good things start coming to you. But the moment you start executing randomly, you will not find interest in the game. The game won't interest you. Sometimes it's all about pressure that you face.
It's not easy.
So how is the year going
Mm.
with trading
So far, so good.
back and forth? But it's better than
Not
carrying
really
this.
back and forth. No, 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 no. Like I've never had any loss so far.
Uh,
Mm. I'm really reserved. So like I'm not really rushing it at all.
mm,
Mm.
patience. Those times I would have executed this by law sharp. Oh yeah, I would have executed this by. The reason I didn't execute this by is because the stop is very wide.
Mm.
The stop is wide, 90 pips. Thank God I didn't execute.
Would
This time
have been
around, I have
drawdown.
to see. Come again.
I would have been drawdown. You would have been drawdown by now.
Yeah, I have been in order. Because I considered how good has moved and where it is now.
No.
No targets. So nah, I have
You
to be
know,
careful
Papa.
this.
When it's steady good, like and when it moves massive like this, to do its things, those
Mm,
sketchy things, this before you see a nice setup before it move again.
this was the move I was talking about. GBP USD.
Mm-hmm.
See clean zone to
It's selling.
yeah. It was very clean. Very clean. Wow. This year they're strictly gold. And now, like, I've seen how it moves, the patterns.
Mm-hmm.
So it has become easily to predict. But maybe the confirmation is what makes it difficult to enter.
Difficult. Okay.
I've seen the patterns, especially on the H4 time frame.
Mm-hmm.
I've seen the patterns, so when it is moving high like this,
Mm-hmm.
when it is high like this, I'm just going to be looking for a buy. But when something of this sort comes in, this bearish candle comes in, I'm going to be looking for a buy, and I'm going to be looking for a sell, because the market doesn't do any other thing than moving up, down, up,
Down.
down, up,
Yeah.
down, up, down. So with every move, every that trend, I know the scenario, I know what I'm going to be doing.
I'm going to
If it
look
is
for.
up like this, I'm going to be looking for a sell. So the opposite is going to be like this. When price is up like this, only buy. When price is down like this, only sell. So this one like this, only buy. But the moment it is in an uptrend and price will pull back at the higher time frame, with that, I'm going to be looking for a buy, and at the same time, I'm going to be looking for a sell. If any of them present an opportunity, I'm going to be executing. So you see this morning like this, it just up. I'm just going to be looking for a buy. But
Bye.
during the Asian session like this, we had price move like this. This is how price moved. Price moved up and pulled back. With this one, I'm going to be looking for a sell. I'm going to be looking for a buy. So it's like when you get, as I said the other time, every shift in trend starts from the lower time frame. Okay, so when I see structure like this, if I see a shift in trend at the lower time frame, then I'll be looking for a buy,
Bye.
because now the trend is about to move up. If I look for a sell with that one, since the previous H4, the candle is bearish, I'll be looking for what? A sell too as well. So let's see how where I would have taken the sell. So this is where I would have taken a sell. I would have taken a sell at this point. If price break the low, I would have taken a sell, because why am I taking the sell? The opinion was coming from the higher time frame, because the previous H4 candle closed bearish. And why do I want to take a buy? The trend is an uptrend. So if I see a shift in trend, I'm going to be taking a buy. At this point, there's no shift in trend. The lower time frame, 30 minutes, is what? Making lower lows. The trend is what? An uptrend. The trend is an uptrend. Price just broke, made a pullback, so change to downtrend. So I have to see a shift in trend. So the shift in trend is going to happen over here. Or maybe if you see something like this, then there was a shift in trend. So let's fast forward price and see if something of that sort happen. So you see there was a shift in trend over here. This is where this small distance, if you understand technicals, you get to understand that price has shifted. It just made high, came down, broke the low, broken the high. So there was a shift in trend over here. So if the range is big, I would have range is big with timing, volume time, I will be looking for a buy. Okay. Or maybe the buy can happen. So as this one is happening like this, where will I take a buy, a sell? I'll take a sell maybe if I see a price break below this one. Price break below this one. If price break below this one, with that one, so I'll consider a sell.
Okay.
Okay. But at this point, if there was a shift in trend, then I'll be looking for a buy. So you need to understand the move, what is happening at the higher time frame, and this what action you want to take. The action you want to take. You get it?
Yes, please.
So with this one, breakout like this with volume time, when price pull back, gold does not care about break and retest or waiting for. If there's a zone and volume, gold is just going to move.
No.
just going to move. You get it? So that's what you understand. So every scenario and the decision to take. So if at this point, maybe if we come to the market during the New York session and I notice price has given bearish candle, looking at the pattern structure, it's an uptrend. I'll be looking for a buy and at the same time a sell. So with the buy, with the sell, if price, maybe if the H4 has closed bearish, with the sell, I will look for a sell when price break below this one with volume. With a buy, maybe if it takes the high, okay, during volume time, I'll be. So it varies. These are the things I always look for when I come to the market during volume time. So as I'm saying, don't go and practice this thing when there's no volume.
Yeah.
You need to practice this thing when there's volume in the market. You see, at this point, volume is dying, so I'm not going to risk anything. I'm just going to wait for the right time. Volume is dying. Nothing is happening. So price has, yeah.
London session really gets me bored. So I sometimes feel not even like I analyze even London session. It's serious. So like I wanted to always just focus on the New York session. Only New York. I'm planning to do I said less things. Let me just focus on New York. If I come to New York session, volume time, I see opportunity then.
Oh yeah, I have. There's this guy I know. He only trades New York session on gold and maybe Nasdaq, and he makes good money. He trade only gold and Nasdaq.
The New York session, yeah. Sorry, the London session really they want me. I don't really see any good price movement. Just like sounds typical in this thing.
So at this point, it's only New York that you concentrate on.
I'm concentrating on that for some time now.
Yeah, lending session too. So that's why I don't waste my time on the lending session.
Lending session.
Maybe from 6 to 9, from 8:30 to 9, I'm done.
9.
Yeah.
Serious.
So at this point, you start around what time?
12.
You start watching at 12. Yeah, you don't have to just stress yourself too much. The more you even stress yourself, you lose more.
No, that is serious.
If you stress too much, watching, you lose more. You end up losing more because you try to chase every single move.
Every move.
You start losing more. So I'm even done. I'm done for the lending session. If it moves, I will come. New York session is there. You see a significant pullback. I trade it. Okay, guys.
Okay. Thanks for your time.
All right.
Okay. Bless you.
All right. Bye.
Bye.